Hi everyone, my name's Anita Marshall. I'm a mortgage broker from Advanced Finance Solutions.
And my name's Gabby. I'm a Client Liaison Officer from Advanced Finance Solutions. And this is Financial Friday, where we answer all your questions about finance.
So what we did earlier in the week was we posted a question on Facebook to say, what do you want to know about finance? So thank you so much for all the people that did ask questions. We've got some really good ones to answer, so it's a bit exciting.
So the first question that we're going to start off with is, friends of ours are going to give up a big house and move into a smaller, cheaper rental so they can save for a deposit for a home. They'll be first home buyers. What is the most they'll be able to borrow as an LVR?
Okay, so just for those who don't know, LVR means loan to value ratio, so what percentage they can borrow on the home. So for most lenders, for a first home buyer or an owner occupied purchase, most lenders will do a 95% loan. So that means you need a minimum deposit of 5% of the purchase price. If you're a first home buyer and you're buying a brand new property, you would qualify for the first home buyer's grant of $15,000 in New South Wales. It's different throughout each state, but New South Wales, it's $15,000, and exemption from stamp duty on the purchase. So that means that the 5% savings would be enough. If you're buying a brand new home, that's the case. If you're not buying a brand new home, you would actually need enough to cover stamp duty and all the other costs involved. So probably another 5 to 6%, so 10 or 11% if you're buying a second-hand home, or 5% deposit if you're buying something brand new.
Very good. So the second question that we're going to answer today is, explain the changes of investment lending.
Okay, so APRA has come down on the lenders and said we want to try and slow down the investor market, especially in Sydney. So the banks, as a result, have reduced the percentages that they are going to allow people to borrow on an investment property. A lot of banks are now only lending 80% on an investment purchase, which is a lot less than what they have done in the past. We do still have a few lenders that are doing 95% loans for investment, but there's not many left. So if you are planning on buying an investment property and you want to borrow 95%, I would suggest you do a pre-approval ASAP and get that underway.
The third question we're going to answer today is it better to be with one bank to buy multiple properties or spread your loans around to lots of banks?
Oh, that's a great question. So in the past, if you went to an investment group or you went to a financial planner, they would often give you the advice of trying to spread your portfolio over multiple lenders. That way one bank hasn't got all your business. However, in Australia, we have what's called the all monies clause. So if you don't make the payments on a loan, they can grab other assets of yours anyway. So the advantages of having your portfolio spread between lots of lenders is not as great as in some other countries where the bank can only obtain one asset if you defaulted on the loan and the property had to be foreclosed on. The advantage of having lots of loans with one lender is that the more loans you have and the larger the loan portfolio, the better interest rate they will offer you. So I guess that answer depends from person to person and how comfortable you are with having everything at one lender. But to give you an example, I have all my home loan and investment loans with one particular lender, and that gives me a really great interest rate. I can log in once and see my whole portfolio with one internet banking login, and I'm really comfortable with that. But each person would have a different answer for that, so it depends on a case-by-case basis.
The fourth question is, I had trouble picking a boat to buy. Is there any professional people to help you buy the right property for investment, duplex, unit, standalone or acreage? And where'd you find one to make sure it's sound?
Okay, so that question is actually from a very good friend of mine, Pete. I went to school with Pete. And Pete, I know that you spent a lot of time doing the research into buying that boat, and you shopped around, you went for a test drive with a few mates and went to Tea Gardens pub in boats and all sorts of things. So you knew a lot about what you were doing before you actually bought. And I think that's a really important thing to do when you're buying an investment property. Do your research, check out the area that you want to buy it in so that you know what prices are in that area. There are certainly buyer's agents and there are certainly investment groups that you can get more advice on if you still feel after that you need some more assistance, and I can certainly put you in touch with those types of people. But I think it's really imperative that you find the property that you want to buy, do the research and feel comfortable about what you're doing at the time. If you know the area that you want to buy in, once you've done your research, it's a good idea to contact a couple of agents and see which ones you feel comfortable with, and actually tell them what you're looking for, and they might be able to tell you about properties that come on the market before they've even hit the market, and I think that's a great thing for everyone to do.
The fifth question we're going to answer today, and this is from the general mortgage broking questions area, the best rate you can get at the moment.
Okay, so in our mortgage broking industry, we're hit with a lot of compliance rules, and one of the compliance rules is that we're not allowed to say this is the best loan or this is the best rate, because the best thing for one client might be completely different for another client. In saying that though, there are some really, really competitive rates out there at the moment. St George have got a special on at 4.09%. The comparison rate is 4.10%. There's no application, no valuation, no legal fees, and they've also got some really competitive fixed rates as well. It really depends whether you're looking for a product with offset accounts, savings accounts, packages with credit cards. So from client to client, what is considered to be best for one client might be completely different for another. But yeah, there's some really interesting answers to that question and some great rates out there. So we're happy to help you find what you consider to be the best rate for you. But as mentioned, that St George special is really popular with our clients right now.
The sixth question we're going to answer today is, how do I get money and how do I keep that money?
Great question. Okay, so how you get money is you work very hard and you put it in your bank and you don't touch it. And how do you keep money? I think really the serious answer to that question is you really need to have a budget, and you probably need to have 3 different savings accounts, one for spending, one for bills, and one for saving that you do not touch. That's my advice for saving and keeping the money.
Now I've got a very good question. Why choose a broker?
Okay, so this question is from a local conveyancer and law agent, Louise Catlow. And it's a good question because Louise has actually mentioned that a lot of people that come to her to have their conveyancing done have already got their finance organised because they've gone direct to their bank. And a lot of people do that, and as mortgage brokers we're trying to turn that around and make it so that people come to us instead of going to their main financial institution first. The advantage of going through a mortgage broker, number one, with our brokerage firm, we don't charge a brokerage fee. So it means that we're going to hold your hand all the way through that loan and buying process, and you're not going to have to be doing this on your own. The second advantage is that we can use 44 lenders are on our panel, so we can choose we have a choice of all the major banks and lots of other lenders. So you get a bigger choice if you come to a mortgage broker. We can probably still do the loan that you've got through your we can probably still do the loan through your own financial institution if that's what you want, but we are able to tell you which of their products is the best for you, all those sort of questions. So it just gives you a much larger choice and a lot more support as you're going through the loan process.
How come you might not service with a bank but might with another lender?
Okay, so one person might qualify, they might go to their own financial institution and be knocked back and then come to us and we can get them approved. Every single bank has different policies. For example, one lender might not accept casual income whatsoever. Commonwealth Bank have got great policies surrounding casual income. So it really depends from each scenario as to what lender that best fits with. So another example, at the moment, Bank West are only lending 80% on investment properties. Commonwealth Bank is still lending 95%. So if they went direct to the Commonwealth Bank and wanted 95% purchase price on an investment property, Bank West would say no, and they can go, well, I can't do that. Commonwealth Bank, however, would say yes, they can do that. So it just depends on the policies of the lenders as to what they will and won't do.
How much does one need to retire at 60 at $1,000 a week till they're about 75 years of age when they can get the pension?
Okay, so that's a financial planning question. I think we've got another one there too, haven't we, Gabby? What's the second one?
The second one is salary sacrifice the best option or having self-managed super fund?
Okay, so all of those questions unfortunately are financial planning questions. We are mortgage brokers, and so we set up home loans for people. We set up investment loans. We can do self-managed super fund loans, but we don't actually get into that financial planning part of the market. I am actually a fully qualified financial planner, and so is one of the other brokers in my office, Marion, but neither of us want to be involved in the responsibility of looking after people's money. So we will definitely pass those questions on to a financial planner and see if we can get some answers for you surrounding that, and then come back to you. So that's the end of our Friday finance section, and we will be doing this again next Friday, and we would love it if you'd post some questions or comments, and if you want to know anything else, please let us know, and thank you.
Thank you.
Have a great weekend.